in the back of my head, I am slightly worried with like how much of mining hash rate is getting publicly known and is publicly out there, which means that the surface level for state attacks is a little bit higher, a little bit easier to happen. I'm not like thinking that in the next 10 years the US is going to try and conspire against like the Bitcoin industry by taking over all these people's facilities, but certainly like from a miner's perspective, we want to build as resilient of an industry as possible so that no single actor, regardless if we think they're good today or not, can attack it.
Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on Ethan Vera from Luxor. Ethan, welcome to the podcast.
Thanks for having me, Joe. I've been looking forward to coming on for quite some time, so I'm excited
Absolutely.
for this one.
Yeah, absolutely. Excited to have you. So if the audience, they may not know who are you and how did you originally get into Bitcoin?
Yeah, so I'm one of the co-founders and the COO of Luxor Mining. So we're a full stack software services company in the mining space. Been in mining for about a half decade. Before that, was working at Goldman, part of their initial blockchain coverage team in the investment banking group, as well as working in some adjacent industries, semiconductors, energy, all of which ended up being, pretty important coming into the mining space. At the time, I had no idea. It was, out of pure luck, but kind of all built me into really caring and taking an appreciation for what mining is, and it's definitely where I want to spend the rest of my career. So it's been a good first start here.
Nice. Yeah, I actually did not know about your background, so that's interesting. I guess we'll just jump straight into mining. How are you thinking about the mining landscape right now? Like Bitcoin is well off its all-time high, mining difficulty is at an all-time high, and energy is pretty much becoming more expensive all throughout the world. So it's pretty much like pretty trying times for miners. How are you just thinking about it broadly right now?
While this point in a cycle isn't new to the mining industry per se, it is the first time that we're going through this where the media and the public actually cares about mining and there's a lot of attention to it. Some of that's due to just the increased adoption of Bitcoin. Some of it's, mining specific, a lot of publicly listed companies and public shareholders involved. But regardless, it's getting a lot of attention this time. This kind of reminds me to a degree of what happened in summer 2020, as well as kind of the tail end of 2018, uh, time in the mining cycle where economics are dropping in terms of hash price. The dollars that you can get from your machine are dropping. At the same time, manufacturers had previously already built a ton of machines based on the past 6 to 12 months revenue. And so now they're delivering all these machines, and you're seeing a surplus of people competing over a fixed number of Bitcoin. And it's really crushing economics here. What I think is interesting about this cycle compared to the last two kind of downturns is high energy prices. We didn't see that high of energy prices in the past two, and that's squeezing people on the cost side. And then the leverage on people's balance sheets. You can certainly see that some of the pubco level, a lot of people got very aggressive with taking on debt capital in 2021 when it was very cheap, and now they're facing a situation where they have very low economics, but they have very high debt repayments, and they're getting squeezed. So I think there's going to be two things that really define the people who win here. One, who can do treasury management the best, keep a clean balance sheet, and then two is like, because it's a commodity business, who can have the lowest cost operations, the highest efficiency machines, and really be more defensible in this highly cyclical industry we're in.
No, I think that makes a lot of sense. It is interesting how all throughout last year we saw these publicly traded mining companies just kind of go all in on Bitcoin. Like they were trying to raise as much equity and as much debt as possible to buy as many machines. And I think like in comparison to like maybe more of a traditional commodities market, they're going to be like actually hedging, the price of Bitcoin instead of just leveraging to the hills. Do you think that's going to change? And I know Luxor is working on products that might help miners change, but do you think that will change over time?
I think the concept of raising capital in bull markets makes sense because it's cheaper. I think people misjudge the ratio of equity versus debt capital and went a bit too heavy on debt. Those that went heavier on equity, for example, like a marathon, are in a better position than somebody who went as heavy on debt, like a core scientific. So I think people's minds will start to change on like what type of capital I should be raising. But I foresee that continuing to be attractive in bull runs. In terms of like de-risking your business, I mean, this is a commodity business, so similar to any other like oil company or gold company, like you need to find ways to de-risk your business because you're at the mercy of commodity prices that are outside of your control. And so that can be done in a few ways. We've talked about treasury management already, but the other two really are on the cost side, like locking in a fixed PPA or doing, electricity futures through a platform like CME is important. We've seen a lot of people that weren't able to lock in electricity prices this past cycle and are now facing negative consequences for it. Big announcements coming out last week, for example, like Core Scientific raising their hosting rates to upwards of like 9-10 cents. So that's really important for miners. Lock in your cost of power as much as possible. Even if the forward power curve looks like it's going to go down, I think it's too big of a gamble to bet on. And then second is on the revenue side. So it's still pretty nascent, and there's not a lot of great products out there. But these machines produce hash rate. Really, miners should be hedging the hash rate in which these machines produce, or at least a portion of it to cover your costs. So we're working on a product here. A few others are as well. Our view on the space is there'll be a myriad of different products out there, everything from cash settled to physically delivered, options, forwards, swaps, offered by multiple vendors and exchanges. And together, those will form the basis of a new financial market that miners can tap into to hedge their revenue, or a portion of it to become more defensible.
Yeah, definitely. The other day you had a super interesting tweet is focusing on S19 XPs, and you're basically explaining that these, very, very new gen mining rigs could basically act as kind of like a hedge on further downside in the price of Bitcoin, or at least the market value of these machines might not fall the same amount if Bitcoin, just rips to, or gets hit hard to 10K. Can you explain your thought process on that, or why that would be the case?
Yeah. And so that was a stretch of a tweet because I'm not sure if it'll happen, but based on evidence from past cycles, looking at machine price and mining economics, it's very clear that high efficiency machines move less with downturns in economics. And so if Bitcoin price, say, crashes by 50%, you'll see a huge sell-off in old generation machines, S9s, S17s. They'll go down to basically being worthless because an S9, you can't mine with it, sub 1.5 cent is what it takes to run it. So they basically become, heaters. Whereas the new generation machines definitely move less on both downside and upside as well. So that's definitely, the evidence is there. But I kind of took that a step further, saying, okay, if we break certain resistance lines in terms of hash price, it may be the case that only the top efficiency machines can mine. And all these people who set up mining businesses, have investors, that they've got into mining, will need to go to the highest efficiency machine in order to keep mining, or else they'll have to exit the industry altogether. For example, like a Bitmain S19J Pro, which is considered almost top of the line, you need under 8 cent power to run that profitably. If your host charges you 10 cents, you got to turn that off, or find a new host. And so those types of market participants, I think, could potentially flee to the S19 XP or the M50S or the new Avalon A13 series that was announced this morning, and really kind of flock to those. So we could get into a really interesting dynamic where if the price of the hash price decreases, so mining economics decrease, certain machine models could actually increase. But that's a hypothesis. I guess we'll wait to see.
Yeah, no, I mean, I generally agree with that idea. And I think that if that does happen and hash price just gets obliterated, it doesn't necessarily mean that everyone that owns older mid-gen and S19J Pros will be buying XPs. It only takes a small group of those people to buy XPs to really put a bid in for XPs and prevent them from going down, I think.
That's a good point. There's a very high correlation between machine prices and the price of Bitcoin and hash price, but also it's a supply and demand market. That's how the price of everything's set. So if for whatever reason supply becomes constrained, maybe the US sanctions certain components of Bitmain's process or whatnot, or certainly with Canaan and SMIC, it's a bigger concern. There could be just a shortage of new generation machines, and a shortage of supply will skyrocket the price.
Yeah, I'm curious to know your thoughts on this idea. Over time, we've kind of seen ASICs commoditize, quote unquote, where the next gen rig is more efficient than the previous gen rig, but it's not like magnitudes more efficient. Do you think that that trend will continue? And if so, or if not, do you think that the rigs that are released today will they be able to last longer and maybe maintain their value for a longer period of time?
Yeah, I think that's kind of like a theme of like people predicting like Moore's law breaking, basically like our improvements on efficiency and chip size will decrease over time. I think that's the case for almost everything in life. It's very like when you build a big company, it's very hard to grow at 200% a year. But if you're a startup and it's your first year of operation, 200% is doable. And so when we saw kind of the evolution of ASICs, from the Bitmain S1 all the way to the S9, like it was just like a steady fall in power usage per output of compute. So it's certainly the case where that percentage of gain each year is going down as a percentage. Um, but I do think that we will continue to innovate, and so as long as you have the hypothesis that the Bitcoin price will increase over the next 10 years, hash price will also increase. And so in that case, people will be incentivized to build better and better machines. But I do agree with the thesis that they will steadily decline in terms of, how much better they are every generation. In terms of how long they last, that's an interesting concept. I mean, from a hardware perspective, we realize now that it's very dependent on a machine. An S9 lasted 5, 6 years before you started seeing like mass failure rates of them. So it's very durable, whereas S17 series, like could barely last 6 months. It's hard to say where the XPs fall in that. I would lean towards the former, just given, Bitmain's really stepped up its manufacturing game and learned from a lot of the mistakes from the 17 series. But there's always a chance that we see mass failures of the XPs. We've never run that type of chip before at that hot of a temperature in operating climates like Texas. And so there's a lot of like new variables that we're introducing that could change the outcome of machine longevity.
Yeah, it's a good point. We've brought up the term hash price a lot of times, and I'm not sure if the entire audience even knows what that is. Could you just explain that?
Yeah, so hash price is really the fundamental basis of how we look at like the mining space, mining revenue. So machines, what they do is they produce compute power. They produce compute power that can work on the SHA-256 hashing algorithm. For that compute power that they generate, they get paid out for a certain amount of it based on the mining economics at the time. And so you can calculate basically how much a single unit of compute generates over a certain period of time. And so internally, we denominated in the amount of dollars that a petahash of compute generates over a daytime. The amount that it generates is based on three things when you look at it on a Bitcoin basis: network difficulty, which you can get directly from the blockchain; transaction fees, so people that use the network and pay a transaction fee as part of their transaction; and then block subsidy. So on a fixed schedule, roughly every 4 years, decreases by half, currently 6.25 BTC. So with those three metrics, you can get how much Bitcoin a machine will produce in a daytime or a unit of compute. And then you can just exchange it to US dollar if you want to denominate it that way. And so that's how we look at building financial instruments, and that's how we look at mining economics.
Yeah, I noticed it may have been a week ago you guys switched from quoting hash price in terahash, and now you're doing it in petahash. Why make the switch there?
Yeah, it is unfortunate because we spend so much time coding it in terahash, and so it's even hard to fix like internally. I think as this industry grows, everything will shift towards bigger and bigger units of compute. Eventually, a machine is going to produce petahash for 1,000 watts of power eventually, and so we kind of just like we're looking forward in the next 5 years and decide to rip off the band-aid now. Eventually it had to happen. Like you're going to be denominating in higher and higher levels of compute as our computers get better and more computers get added to the network. So yeah, we just ripped off the band-aid. We're doing it in petahash now, and that's how our financial instruments trade on a dollars per petahash per day basis.
Yeah, that kind of reminds me of something I saw on Twitter. I think it was yesterday or today. People again bringing up the idea of denominating Bitcoin in Satoshis rather than dollars. Do you have any opinion on that topic as well?
I think eventually we will. Um, and so it's a function of when do we want to make that change. Maybe it's too early now, just given Bitcoin, still kind of around the 20K range. But certainly when Bitcoin becomes, valued much more, I think it does make sense to start valuing it in Satoshis. It's similar to how like companies deal with like stock splits, like either stock split or reverse. Like you want the number somewhat digestible for people. It's obviously a matter of perception. It doesn't actually change anything, but perception matters. Like if you go to buy a stock and it's $5,000, people are like, "Oh, it's really expensive." But if you go to buy it at $2, they're like, "Oh, it's very cheap." It's like, well, that's not really how things work here. And especially for Bitcoin, where you don't have to buy a full Bitcoin. It really doesn't matter, but it's hard to get that across. So I think going to Sats will make it easier for normal people to digest. Like, okay, this I don't need to make a $300,000 purchase. I can make a $10 purchase pretty easily.
Yeah, it's kind of interesting how a lot of people have a hard time grasping like that idea that it doesn't really matter how many shares outstanding you have or how many what the actual number of Bitcoin is. It's the idea that it's a pie that's being split. You have 1% of the pie, no matter if that's 1 Bitcoin or 100 million Satoshis. It's the same thing. But yeah, it's an interesting topic. um, this summer, I like looking at hash ribbons to see if there's an ongoing miner capitulation, basically seeing if there's net hash rate coming on or off the network. This summer, we kind of, according to hash ribbons, we saw a small miner capitulation where difficulty did go down at least a couple times, and hash rate came off the network. Do you think we'll see another drop in hash or significant drop in hash rate before the 2024 halving? Or do you think that we're just going to keep, slowly or quickly maybe grinding up from levels that we are at today?
Right. That's an interesting topic. I also spend a lot of time looking at the hash rate charts, and I still haven't figured the best way to do so. A lot of people don't know that network hash rate is not a like real number. You can't get that from running a node. You need to estimate it based on something else. Um, and so the majority of people look at network hash rate based on the average block time over a certain look back period, 3 7 day average, simple moving average or something like that. Um, it's not perfect though, because for example, like a 3 day simple moving average, 144 blocks per day, three days, it's not a huge sample size. And so there's a chance that a lot of mining luck is going into that number. For example, sometimes we mine blocks 10 seconds apart, or last week we mined a block that was 85 minutes after the previous block. And so there's a lot of variance in small numbers due to the probabilistic nature of mining. But then if you look at a 7 day, if you're trying to like get a current level of hash rate, you're averaging it so far back that it's like, well, a lot of this influence was from last week and not right now. Um, so I find that interesting. Would love your take on where you think like the best source to look at for network hash rate and how to analyze it is. But in terms of your question there, like, do I think there'll be another minor capitulation? Um, I think we're definitely in a dynamic now where there's a lot of people near their profitability line, so where they're willing to supply hash rate to the network based on their mining economics. And so in the case that Bitcoin price drops, I think there will be a lot of people that are turning off their machines and capitulating. And certainly in the halving, if we haven't, seen a large run up in Bitcoin price, it's going to be very painful for the high cost operators and the low efficiency miners, for sure. And we could use like 2016, 2020 having as a case study there where block reward drops by 50%. Mining economics are falling, around 45% because of transaction fees. And so you immediately see a huge drop in network hash rate, sometimes on the scale of 1 to 1, sometimes a bit less. But I think if we're near profitability lines, then the scale is going to be near like 1 to 1 drop.
Interesting. Yeah. Yeah. I mean, I was just thinking, imagine if the halving was tomorrow, it would be absolute chaos probably in the mining industry. But yeah, I think you made a great point earlier about measuring hash rate. I see like big accounts on Twitter, pretty regularly, post like hash rate with basically like a 1 day moving average of, and it's being calculated, like you said, off of block times. And people are like, oh my gosh, thousands of miners got plugged in overnight. This is crazy. Is this like a nation state attack or something? And it's like, no, it's not really how it works at all. It's just a complete estimate. And, it's most likely that blocks were just flying in by random chance for the last 24 hours rather than more hash rate actually coming online. So yeah, as far as measuring it, I mean, I like using the 14-day moving average just to get a quick idea. But yeah, it's not an exact, measurement by any means. It's pretty much impossible to accurately correct on or accurately determine at like any point in time, I would say.
That makes sense. I do like using self-reported hash rate by the mining pools for point in time events. So like China ban or Kazakhstan like power outages, you can see all the pool hash rate just dropping all at once, and you can see very like live of like what their reporting hash rate is. It's also not a perfect metric because it relies on you trusting the mining pools. So there's nowhere to verify it. They could just show that or they could not show it. But I think if you like try to understand the incentive, like why would mining pools try and alter this data, you can start to get at least some level of confidence. Okay, well, you know, all pools are showing a drop in hash rate. There probably is something going on with like one of these countries right now.
Yeah, no, that's another interesting way to think about it as well. I'm curious to know your ideas on, the last, I guess, couple weeks, or I think not, we had a difficulty adjustment maybe yesterday or very recently. And then the one before that, it was like plus 13%. So what are your thoughts on why hash rate right now? Why is it jumping so much? Why is difficulty jumping so much? Did it have something to do with the ETH merge, or are there a bunch of other factors at play?
I think it's a few different factors. So the biggest one I would say is that machine production gets planned up to a year in advance. And so machines delivering in, October 2022 really were planned from economics last year. And so basically we saw that in 2018 and 2022, especially in 2018 with just S9s flooding the market when there's no business for those to get flooded. And so I think that's like probably the underlying pin to it. But then there's all these other factors. There's previously allocated to Ethereum mining. That power can be repurposed. The racks can be, changed for power density. It's not the easiest thing in the world, but it gets done if the economics are right. I personally know probably like 30 to 40 megawatts of Ethereum mining power that was now allocated to Bitcoin mining. And I don't know that many Ethereum miners, so I assume it's like, 20x of that. So it is a significant amount of power, probably. There's obviously rumors going around that Russia is really gathering a lot of hash rate just based on like, geopolitical relations, sanctions of their energy sector. There's discussions of Bitmain plugging in on a lot of machines based on excess supply they have. And then finally, I think, which is definitely more verifiable and less of kind of a rumor, is new efficiency machines getting delivered. XPs are starting to hit farms in big numbers. M50Ss, they're raising the, I guess, the efficiency. So like basically how much profit each of these guys can generate. And if you have, say, three S9s running, that's, over 4 kilowatts of power, you could replace that easily with an S19 XP and generate like 3 times as much hash rate off that same amount of power. So certainly like those efficiency machines hitting these farms, replacing old gen, is going to be a big reason why that network hash rate's increasing.
Yeah, I pretty much agree with all of those points there. Back in 2020, Blockware basically pioneered this research idea that was estimating miners' operating costs by their machine efficiency and their energy rates. And I know you have, additional ideas on this topic. What are your thoughts on that?
Yeah, so that report was released, yeah, I forgot which month, but early 2020. It was one of the most interesting reports I'd read all year, and it was actually right before the halving too, so it was extremely relevant. Um, so yeah, I think it was a great article. I recommend everyone go read it. But one of the most interesting pieces of that was basically a projection of where the network was at in terms of operating costs based on the efficiency of the machines that were running. And why it's so interesting to layer those two concepts onto each other is because then you can get to what the gross mining margin is of miners. And so one of the analysis we're working on right now is this concept of hash price resistance lines. And so the idea of like, where do miners want to supply hash rate and when will they decide not to supply hash rate to the network? And if you kind of use some economic theories, like when mining margin is negative, they're going to turn off their machines. Then you can start to understand, okay, if we see a fall in Bitcoin price, how many miners on the network are going to turn off their machines? And so what we've come up with this analysis, kind of building on that breakdown, is basically as Bitcoin price falls, or if Bitcoin price falls, how much network difficulty is going to fall as a result of that. If we were at, say, a hash price $1,000 per petahash per day right now, if Bitcoin price fell 5%, network hash rate wouldn't drop at all because everyone's still making 95% margins. No one's going to turn off their machines. But if, say, it dropped 50% in today's world, probably like 35, 40% of the network hash rate is going to fall offline because it's going to throw a lot of people unprofitable and they're going to have to turn off their machines. And so we think that's a really interesting analysis for market participants, especially people who look at downside risk, like credit investors, right? They want to know, okay, if I finance a client at 5-cent power at S19XPs, how defensible are they? Where are they on the chopping block? Are certain big operators going to fall before them and provide some resistance to hit their cutoff levels? And kind of looking at some case studies here, 2016, 2020 were like perfect case studies for it. And so kind of looking back at both of those, you saw that once that having happened, hash price really stabilized among certain levels based on the network efficiency at the time, or estimated network efficiency, as well as operating costs. Back then, it was much higher. It was like $750 a petahash in 2016. But that's also because machine efficiency was over 100 joules per terahash. So you had to generate a lot more per unit of hash to make up for that. But yeah, I think this opens up like a new frontier, building on that initial Blockware report of like all this really interesting analysis that can be done using kind of the breakdown of operating costs and machine efficiency.
Yeah, I'll definitely look forward to checking out that report because totally agree. I think it takes a while to construct that and to try to really get the variables correct, but it's extremely valuable to like the entire industry, especially miners and a bunch of other market participants as well. But yeah, I think that was a good topic. I saw Nick, who's I think he's the CEO of Luxor. He posted this tweet that I thought was like very interesting, and I'm not sure if I completely agree, but I'm curious to hear if you agree. He said that I don't know where the top is in this huge hash rate growth spurt, but I do think once we hit that peak, it will remain the top for several years, if not a decade. So basically, Nick was trying to say that at some point, I don't know, somewhere in the future, hash rate is going to peak and potentially not make a new all-time high, and for 10 years. Do you agree with that, or maybe I misinterpreted it?
Yeah, I think Nick's good at getting engagement on Twitter these days for sure. That I agree with. It's an interesting thought exercise for sure. The way I'd approach thinking about this is kind of related to a lot of the topics we've discussed already today, which is like supply and demand for hash rate. So demand is set. Supply really is like, so on the max supply side, it's like how many machines can these guys produce, which we've talked about really as a function of economics. If Bitmain can sell machines for higher than their cost of goods sold, then they'll do it. They'll produce more machines, right? And so under that assumption, manufacturers definitely have the ability to produce more machines, even if there is kind of decreasing efficiency gains per generation. There will be some type of gain over time, and the amount of units on the network will also increase. And then so the other dynamic I'd look at really for that is like, are people willing to supply hash rate to the network? And that's a function of mining economics. So if Bitcoin price increases significantly, people are going to want to run machines. If it stays flat, then there may be some like laggard hash rate growth, and it may even be stagnant. But so I guess my end analysis on that is like, I think because I believe the price of Bitcoin is going to go up, I think there's a very low chance that hash rate growth stagnates. I think it's going to continue to increase into the future. So I might have to disagree with my co-founder Nick there on that one. But I guess we'll wait to see what happens.
Yeah, definitely. I mean, I can certainly see the case where Bitcoin just, sticks around 20K and more halvings occur and maybe it goes lower, then yeah, I would agree the hash rate might be falling. Like if Bitcoin's at 10K in I don't know, 5 years, and Bitmain kind of hasn't been releasing crazy new rigs, then yeah, I could see that. But I think if in 5 years from now or 10 years from now Bitcoin's at 100,000 or higher, I have a hard time seeing how hash rate is not significantly higher than it is today. But it will be interesting to see over time. There's, like you said, there's a lot of variables at play. But yeah, kind of going off that, thinking about Bitcoin mining in 10 years, how do you see like the mining industry developing over time? Do you think there's going to be more large facilities like Riot's Whinstone, or do you think there's going to be more like energy scavengers that are like picking up wasted methane? How do you see like the balance of those two very opposite kind of mining structures playing out over time?
Yeah, that's an interesting one. There's a lot of things to discuss on this topic. So I think the two biggest reasons I think people choose certain locations or countries to mine is because of the power cost and the regulatory environment. Power cost being number one, regulatory being number two. Um, and you can see evidence of that. Like right now, people are signing up for hosting contracts in the 7 to 9 cents a kilowatt hour range in North America. Venezuela is offering 3 to 4 cents. Yet investors don't want to put their machines in Venezuela because they're uncomfortable with the regulatory risk there. So both are important to how miners look at it. So when you're kind of thinking through like mega farms versus off-grid miners, I think they have considerations for both. On the power cost side, there's a lot of really good opportunities that are small scale in nature because they're stranded energy assets that um, you know maybe they're somewhere between like 2 to 10 megawatts, um, and those are really nice sites to have. At the same time, I also think there's a future where a lot of the biggest miners are energy companies, which have a very low cost of power. And at that point, probably a lot of those are going to be large scale sites too. So I don't know if I have like a strong opinion on who will get the lowest energy over the long run. I think both have really interesting opportunities, on and off grid. In terms of regulatory, like I'm increasingly concerned about that, certainly in the United States, where like our company is based and most of our partners are based. I think it's very prudent for investors to diversify their regulatory and jurisdictional risk, at least between different states and townships and utilities. But then taking that a step further, ideally diversifying internationally too. You never know when a certain government, municipal, federal, state level will turn against you, and so you want to make sure you have a global defensible business there, even if you're based in the U.S. and you do business here. So I think in that case, there's going to be a lot more hash rate moving to new places like the Middle East, um, potentially Latin America as well. So we're definitely excited to see that happen. Just from like a network standpoint, we think it's healthy. As well from like a company perspective, also think that's going to be important too. The public companies right now are like Bitfarms operates in Argentina, Hive operates in Iceland and Sweden. Outside of that, everyone is US and Canada. So it's really not diversified right now, but I think that will change in the next 10 years.
Yeah, I mean, I think, over the last year or two, we've kind of seen the importance of setting up your facility in like a stable political jurisdiction, whether it is the U.S. or, other countries that may become that are more friendly to miners. But it's been important to recognize, because if you set up your facility in Russia, China, Kazakhstan, like a lot of those ended up getting wiped out, or you lost your rigs if you were a U.S. investor. But yeah, I definitely fully support the idea that, our mines should be geographically distributed all throughout the world, and I hope that continues to happen. But yeah, it's interesting. Do you ever worry about public companies obtaining like too much hash rate? Like I know over the last, I think it was 2 years or however it was, private companies' share of total Bitcoin hash rate has gotten, or public companies are outgrowing private companies, their growth rate significantly. Does that worry you at all about Bitcoin, or how do you think about that?
I think it's natural just given how robust like the capital markets are in the Western world. Like US is just so much easier to raise capital if you're public than if you're private. So I understand why it happened. And I don't fault like people for going public. I mean, they're looking out for their business. This industry is supposed to be capitalist, and Bitcoin's supposed to be anti-fragile. So a company going public shouldn't change the security of Bitcoin. But in the back of my head, I am slightly worried with like how much of mining hash rate is getting publicly known and is publicly out there, which means that the surface level for state attacks is a little bit higher, a little bit easier to happen. I'm not like thinking that in the next 10 years the US is going to try and conspire against like the Bitcoin industry by taking over all these people's facilities, but certainly like from a miner's perspective, we want to build as resilient of an industry as possible so that no single actor, regardless if we think they're good today or not, can attack it. So I mean, I'm actively trying to help promote like international diversification and small scale mining too. I know Blockware does a lot on that too. You guys, help both institutional and retail alike. I think having guys like Blockware and Luxor in the industry trying to prioritize like the development of kind of the small to mid-sized miner is important, and is great for the ecosystem. If we can get more people that turn on 3-4 megawatts worth of power in remote areas, maybe off grid, I think that's a great thing for the network.
Yeah, totally agree. And yeah, I mean, I'm not necessarily worried about the U.S. attacking Bitcoin and like, just doing like an empty block attack to where like no one can use it. I guess would be more concerned about something that's basically like what's kind of happening with ETH, where the blocks they're not building on these blocks consecutively, but many of the I guess validators or whatever they're called are creating OFAC compliant blocks, and it's like currently greater than 50%. And I guess theoretically they could just, now that they know that they have a majority of the hash rate or whatever you call it on ETH, they could just build on top of each other's blocks, and as long as they're all doing it, they basically create an OFAC compliant only chain, because the minority of hash rate, I guess, they could build a block, but the other validators would be building on top of the OFAC compliant blocks only. So I guess that's the risk, that if a ton of hash rate is in the US, they could start only producing OFAC compliant Bitcoin blocks, and if they all conspired together, they could just keep building OFAC compliant blocks on top of each other, and then some transactions would just not ever be able to make it into the blockchain.
That's a great point. I think you can have the belief that Bitcoin's anti-fragile at the same time as having these other thoughts of like, okay, what are the attack vectors? How do we defend against it? And I think that having, over 35% of network hash rate in a single country is bad for the network. I said that when China had it, and like, unfortunately, I have to say it again with the United States now that we're here. I mean, I live here, like our company's here, but like, we still don't want it to be centralized in one country. That OFAC, blacklisting is something we think about a lot, especially running a mining pool. There's a chance that that comes to the mining space. What we see really is that oftentimes when a Bitcoin address gets added to the OFAC list, it's used once and then it's never used again, because somebody spins up a new address, and so they send it to a mixer or something, and then there's so not a lot of pools or miners are including any really OFAC sanctioned addresses in their blocks. They used to until it got added to the list, and then immediately like those addresses aren't used. So in terms of like the actual transactions affected, we did analysis on this. We only saw like 5 or 6 transactions in the entire network throughout the past year from OFAC sanctioned addresses, mostly because people, as soon as they get that, they just send it out.
Huh. Interesting. Yeah, I'll have to dive into that research that you guys did, because I haven't seen that yet. But yeah, I think this was like a fantastic conversation. Is there any other topics that you want to hit, or is there anything you want to plug? I know you got Twitter. I know you got Luxor.
Yeah, so I guess just a quick plug. You can find us on Twitter, Luxor Tech Team. My Twitter is Ethan_Vera. So Hit us up if you're looking to get in the mining space or want to chat anything mining or hash price, hash rate related. Yeah, and then I guess just wrapping it up here, end of year projection on hash rate, I'm going to go with 275.
Sounds about right. I remember the start of the year, everyone was saying like 350 and some crazy numbers like that. But yeah, I think 275 probably might be about right. We'll see. But thanks for coming on the podcast. This was, great conversation. I'm sure the audience is gonna love it.
Thanks for having me on. I appreciate it.
Awesome. See you, Ethan.